RMC Switchgears Limited Quarter 4 earnings. Okay, the Quarter 4 earnings. Yeah, finally, it's okay. Revenues decline in Quarter 4 fiscal 26. We're not going to talk about Quarter 3. Quarter 3 was a horrible quarter for the company, a total loss quarter for the company, but Quarter 4, okay, revenues declined to 142 crores in Quarter 4 fiscal year 26 from 166 crores in Quarter 4 fiscal year 25. EBITDA, okay, EBITDA actually increased to 17.63 crores, okay, from 16.66 crores in fiscal year 20, Quarter 4 fiscal year 25. Let's go to profit before tax, declined to 12.99 crores from 13.75 crores, and profit after tax went to around 9.3 crores from 9.85 crores in Quarter 4 fiscal year 25. So profit after tax margin went up, EBITDA margin went up, and profit before tax margin went up. I think, yeah, gross profit margin also went up while revenues went down. Okay, so profit wise, not exactly, even profit wise, but at least the margins have shown an increase. Now, the overall year, let's talk about the overall year. Fiscal year 26, revenues increased to 401 crores from 317 crores. Okay, there's growth. Ah, EBITDA, EBITDA declined to 47.1 crores from 52 crores. Who's laughing? Okay, I'm not laughing. Profit before tax declined to 30.4 crores from 41 crores, and profit after tax declined to 22.4 crores from 30.8 crores. Quarter 4 was a good one. Quarter 3 was a horrible, horrible quarter. Like it was a lost quarter overall. Okay, we will discuss the con call at a later date. Okay, what do we see? Uh, what is this? Yes, net working capital days 63. Okay, okay. Working capital days improved. Net working capital days improved to 63. So how many days did it take to convert working capital to, I believe, cash? Net working capital days. Good. That's a good thing. That's a good thing. Inventory days declining. That's also good. Accounts payable. Accounts payable days. Wait, collection period is what? Okay, accounts payable slightly increased. That's good. That's actually good for cash flows. Collection period also slightly increased. Okay, debt to equity ratio rose to 0.79%, 0.79. That will maybe need to be monitored, but okay, all right. Now, after reading the con call, if I remember it correctly, the company is actually still confident. Management seems to be still be pretty confident about achieving their 5,000 crores of annual revenue vision, which is in like 2030. I was pretty surprised to actually, while reading the con call, the statements that came out, they were optimistic. They were optimistic. It seemed pretty definite, like there was a path to that. They said, I think that in the last 5 years, they have actually achieved a greater multiple growth. So from like 400-ish crores of revenue fiscal year 26, they want to achieve 5,000 crores in like 2030. Let's say 2030-ish. That's like a 10x plus kind of a growth you need to achieve. They said that now they're at the 400 crores. It might be easier to achieve from 400 to 5,000 than the multiple they had to achieve, let's say when they were 20 crores, they were 40 crores, way lower. When they were way smaller size, they could not bid for certain projects, but now they are 400 crores in revenue. They can bid for larger projects. So they feel that yes, now the journey from 400 to 5,000, that could be easier. That is easier. Maybe that's easier for them than the previous journey. But they're still optimistic about that 5,000 crores. And right now, I guess they have not given an explicit fiscal year 2027 guidance because it's still working things out. I think the word buffer was mentioned maybe. So they're building a buffer, maybe the balance sheet, and focus on more disciplined growth. Focus on more disciplined growth. I think the management said something along the lines of that they have learned from this. They learned from fiscal year 26. Quarter 3 was a big loss here because, first of all, they're actually spending money on product development. I think they have a new product, Pulse Box, which is, I guess, an enclosures product, electrical enclosures product. And they seem to be pretty proud of that. They think that it can fill a pretty good need in the market. The Pulse Box. So, product development costs were there. Then, project execution delays. Some of the projects which were to be executed, they got delayed and they will be, I guess, executed in fiscal year 27. They have a 800 crore plus order book. That's a good thing. 800 crore plus order book and a 1500 crores of a tender pipeline. So orders that they're currently at bidding for or about to bid for. That is it. Not the best year. Still optimistic about 5,000 crore vision. Management is very interesting to see if they will actually achieve it or not. Very ambitious now target, like 5, 6 years, 10x plus growth. Very exciting.